Hey, welcome everyone to Options Trade Ideas. It's Friday, May 16th. Already Friday. It's incredible. Let me read you this disclaimer here. This podcast is for educational purposes only. I'm sharing how I think about potential trade ideas, not giving investment advice. Trading involves risk, and you should do your own research or consult a financial professional before making any investment decisions. I may hold positions in the securities discussed. I wanted to start off first with showing you something that was pretty interesting on the site if you haven't seen it. And let me share my screen. Usually we start right here. And today I actually want to switch gears a little bit. Uh, we spoke yesterday about the other day about my focus list. And my focus list, you can create lists. Let me show it to you here. You can create lists to ultimately create your own strategy. So you would find a pocket of stocks that you're looking at and then add either technicals or options, execution capabilities to that particular list. One of the strategies that we've done over the last couple of months, the idea was fairly simple. Software, let's take a look at it actually. Yeah. IGV is getting crushed here. So about 2 months ago, month and a half, 2 months ago, yeah, 2 months, we were looking at software names, and there was a report out. Goldman Sachs had a report on the Goldman Sachs AI winners, right? Whether, everyone thought software in general would collapse, uh, maybe not. This was kind of showing that, the end of the world was coming. And we thought, what a good way to play this. Everyone was buying IGV. What a good way to play this was to actually create a list of the Goldman Sachs AI winners, the ones that Goldman deems to be the best software names that wouldn't become extinct by AI and this agentic movement. So wouldn't it be great to create this list and get long these names when eventually they turned? I mean, these things were down from, the IGV was down from 118 to 75, but, we were looking at things like Adobe getting crushed, still down there a little bit, but Microsoft also getting crushed down here. So yeah, it was right around here, right around the end of March. And so we decided to create a focus list. So let me show that to you first. So the focus list here was Goldman Sachs AI software winners. There's 24 of them. And you could see the list here. Akamai, Google, CDNS, CDW, Crowd, DDDog, DDog, Doc, DigitalOcean, DocN, DocS. So you have these, all these symbols, names that most of them you recognize: NTNX, Okta, Oracle, Palantir, um, Rubrik, Snowflake. Okay, so we created this list, and off that list, we created a strategy. So let's go to the marketplace, click on all strategies, and we called it Software as a Service Momentum. Okay, and let me just take it. You can hover over these icons here. So let me just take the performance. Click on performance. So that's going to get you to the software, this SaaS momentum. SaaS momentum. Let's call it SaaS momentum. And, recommended budget, 23,000, could have been a little bit more. And what this was going to do was essentially get long on a turn. That's what we were trying to play. Get long on a turn and using moving averages. But it would have to wait till these things actually turned, right? So it gives you the strategy here. No doubt it would probably be aggressive with the stock, the market in the software names down a lot. But I just want you to see this performance because it's actually pretty incredible. So there were 20 trades done, and with a starting portfolio of 23,500, catching the bottom. So you could see the YouTube video we have on the on the um on the YouTube channel. Catching that low, this thing has made a ton of money, just exploded higher, and it's actually quite amazing. So I would recommend that you stop by this marketplace and sort of take a look at what happened here and some of the names that got long and what it's doing. In fact, some of these things you can just look to see what it's doing right now, right? So if you get a signal here, you could say, okay, and follow this. So it's getting here the last 24 trades. Again, Sassy swing a call. This is the option they bought. This was the price. This was either the exit or where we are right now. Right, current, the gain loss, the quantity, cost basis. So each trade is entering at about $3,500, and you have your P&L here. So most of these are closed already. Most of them are closed down here. You can see the close, close, close. This one is still active, CDNS, but some of these have just exploded higher. And the interesting thing is you didn't have to look, right? You got into this thing and literally don't have to look. And this is what it did. So again, I this has made me really interested. And I always think about back testing and everything else. But at the end of the day, all of these models, when you think about building or you think about jumping in charter, all of these models are really come down to the filtering process of where you start. So if you were to look at, let's say, some sort of MACD with some other technical over the course over 3,000 stocks, maybe it doesn't work. If you narrow that down to 23 stocks at a specific time and you have this same MACD, whatever the technicals are, you can choose your own. Of course, that could work. So it's really about automating an idea, having an idea, automating it, and then playing it and playing it in a smart way with controlled risk. I would just tell you, hey, take a look at this one. This was a good one where we had a simple idea and put this momentum type of strategy on it to see if it could catch, and it would only work if the actual momentum started increasing, right? So if this thing actually turned. My thought is, can we do it the other way when, this is an AI monster here? I don't know if it's a bubble, it's a monster. At some point, it probably comes back a little bit, maybe. I don't know when. And so, can we set up an AI large cap focus list and then add a momentum to the downside where we can play it only when the momentum starts to shift the other way? Usually when you go down, it gets really choppy. I'm not sure if that'll work, but I'm certainly thinking about it. And I would say take a stab at building something, take a stab at building your focus list, take a stab at then creating a strategy for yourself. So that's that. I just wanted to show you that just because it's been a tremendous run for the software. It's AI MACD strategy the AI strategy has been doing well, obviously because everything's going up. But this one in particular was something that I thought was special. Now let's get back to what we're seeing today. We'll start with block flow here. I saw a few things here. I just looked about 10 minutes ago. So Pepsi, Wolf. In days like today, it's not like everyone comes in and is super excited about buying options on, a sharp move like we've seen. But we are seeing, look at this EQT again, 50 puts. So this is someone, continuously adding to a put sale position, and it's getting quite large. So, it's one of these names where let's take a look how big this is the open interest. We can take a look at how big they are actually getting here. So go to the open interest, just EQT. We're going to switch to puts, select 1%, and here we go. So take a look at these puts here. There's a significant amount, 30,000, 17,000, 26,000. Let's just add them up here, 52. So it's 37, 15, 52,000. Call it another 81,000 plus 40, 120,000, 133,000. 150,000, including today's expiration, and then 100. So 160,000 puts in this short time frame in June. Most of these we've been seeing selling. So the 160,000 is 16 million shares. 16 million shares times $56 is, I'm sorry, yeah, 16 million shares times 100 is about 800, let's call it 800 and $850, $850 million. Almost $1 billion just in put sales here. So clearly someone is getting long EQT. And again, this is the reason why I follow the buys and the sells. I'm looking for the buys for action, but I'm looking for the sells for positioning. So this is something that's super interesting. Someone's taking a shot here and saying, you know what, I didn't get enough of let's switch screens. I didn't get enough of the EQT on the way up here on the last breakout, and I don't want to miss it, right? So let's go here. So I didn't get enough of EQT. This was the, remember we've been looking at this. There's a higher number too, but this number is interesting. Okay, so we have this range of, what is that, 27 to about 48, about $21. 21 plus 48 gets me somewhere around up here. And we can change this to, just to give it a little bit more symmetry. This is log. I'll look at log sometimes, not log. Most of the time I like it like this just to look for symmetry, but let's take a look at this. So we have almost $1 billion in put sales. It's a lot of juice. A lot of juice there. So yeah, so 27 and 49-ish. 22 plus 49 gets you 71. 71. So it got close up here. It got close, but to have some symmetry, you got to be up there. So again, this is the spot that they are selling $1 billion of puts. Okay, right there. $1 billion of puts. That's not a hedge fund. They wouldn't do that. That's someone that's long a lot. Actually, we should go here and see EQT. If there's anyone that's, let's see where BlackRock sits. BlackRock is already loaded. Maybe they sold some here. So a lot of times what happens is, so let me give you an explanation. So I think it's someone like BlackRock. That's what I think. I just looked at, I went here and let me show you where I went. I went to the institutional holdings channel. I like it because they give you could see options in there, Jane Street and stuff. It's whoever's holding these options. So I use this one just because it has that information. But let's get back to the chart. So let me tell you what I think could be happening. So the put selling's been going on around, let's call it around, just call it around here. Yeah, you know what? I want to actually show you this better. I'm going to move this to daily. Okay. So this is going to be interesting, I think, for you to understand how these guys think. All right. So we have this 50 level, this pocket down here. Actually, you know what we're going to do? Sorry. I'm going to move this back a little bit more so I get a little bit more time on the chart. Go back a year and a half, let's say. Okay, that's fine. All right, this is going to be better here. Now we have this range. So it's about 52, and today we're seeing the 48, I believe it was. So we have this range, okay? I'm just going to highlight that, 52 and a half, a little bit lower. Okay. Stock goes up and does this, breaks out of this probably area. You could see the big volume at this level, 49.50, a lot of volume there. 48 volume. Look at the big spikes in volumes. You can see sort of the range. They all kind of pop up in this box, which means what? Somebody's probably buying that. Okay. Yes, there's sellers even on down there, there's sellers, but there's a big buyer in EQT for whatever reason. And this thing happens here in the beginning of the year, takes off, right? So they've bought a lot, takes off. It goes from 49 to the high 60s. What do you think they might be doing up here? I suspect that they're probably saying, okay, that's a nice run, maybe a little bit too much. I suspect they actually might even be selling some. So they might be selling some stock here, decide that they're going to sell a little bit along the way up here, making sales. And as they're making sales and the stock does this, comes down to around this level, right? So let's assume you're BlackRock. You're making sales on the way up a little bit. And over here, you're saying, I'm going to start making bigger sales, just lightening up. And as the market's going down, what do they start doing? They start essentially buying stock by selling puts, they're buying stock at these levels here. So they'll be selling puts, selling puts, selling puts, selling puts. So what they're doing is they're basically selling stock to get out of things, to get out of some of it. Let's say 10%, not a lot, but 10% is 6 million shares. So we saw, let me just read it to you. I won't switch the screens. BlackRock in EQT has 60 million shares, 60 million shares. So 60 million shares, we just said there was 160,000 at 16 million. So it's about 25% of the position. So maybe they're selling 10, 15% of the position on the way up, right? Well, we're seeing 60 million shares here in January. That's the 3-month lag, right? They could be selling stuff here as the stock is moving lower. They start selling puts to get long back in this box where they've been getting long likely. And I'm not sure if it's BlackRock, but I'm assuming it's BlackRock. So I'm getting long here on BlackRock. I'm buying all down here. I'm buying on dips. I'm buying rips. Okay. And now I'm going to start selling some, and actually just as it goes down too much, if it goes down too much, I'm basically going to say, okay, well, I'm a buyer in this range as I've exhibited here. And so I'm just going to sell puts as many as I can down here. So by selling 160,000 puts, it kind of indicates that they probably sold 10, 15 million shares. Let's say 10 million shares, 15 million shares. So they cut the position in stock, and now they're getting long again in the areas where they want to be long. Almost like, this has a little bit logic of the wheel, right? Selling puts to get long. When you get up, instead of selling calls, and they might have, I haven't seen many of the call sales, but they're selling stock. So a little bit like the wheel where they're playing, just taking profits here. So I thought that that's interesting. It's something for you to, as you're seeing the flow, trying to make sense of maybe what's happening. Okay, stock is under pressure. It might be them selling some stock, squeezing this, and then they're a buyer down here, so they're selling, squeezing it. I'll buy it, buy it, and literally just taking some premium off the table. All right, let's go back to that. Is something that the logic should be there for you so you can understand when you're seeing those puts and you're seeing repeated puts and you're seeing the stock going down, over the course of the time that you're seeing these puts, it actually could be BlackRock. And then the funny thing is that when they're done, right, or when they're close to done, you might even see call buying, right? Because they know, think about, that's the power, that's their magic superpower, BlackRock. They have so many shares, they essentially they can move the market. And so think about this. So as they're selling, pushing the stock down, say 10, 15 million shares, and then they're selling puts with very low delta. So net, they are selling, but very low delta, collecting some premiums. When they're done selling, you might see some BlackRock traders, the traders trying to make money off of the portfolio, say, all right, we're going to be done. We sold 15 million shares. We've been heavy on the market, and I have the trade ticket right in front of me. I know I'm going to be done in 2 days, in 48 hours. And so, you know what? Let's start buying some upside calls, because when I'm done, I release the pressure, the supply, and now the stock has a chance to move. So if we start seeing calls, that also could be BlackRock starting to play the upside again with a smaller amount of premium. So anyway, just something to think about. It's how I think of the world, and I think that's about right. Um, let's see here. Just to take a look, I would look at this Pepsi here. We're almost out of time. I think that one was that the EQT is a good learning position. Pepsi is, what's this? 155, 170 call spread, and Pepsi looks like it's opening. Where's the stock? 149. So let's see what's going on here. Pepsi. 150. What is it? The 155, 170 in September. There's like the same thing going on here, right? Stock has been under pressure. We're seeing a large buyer of call spreads, 155, 170. September, decent amount of time. So, this is not like it's usually, and it's call spread, so it's not necessarily a hedge fund, although it could be, but usually they're not doing call spreads. And what I would say is this: the you can see here clearly they're playing this higher range, but I would say that this right here, you know, there's sellers here. There are sellers here. Just see something for a second. I want to see if there's any. There are sellers here and here as well. And so sellers down here this way, sellers down here this way, and they're buying this right here. Look, the call spreads is telling me that how much were the upside? Let me just switch quickly. The upsides were $1.82. Okay, so $1.82. Um, so it's a real premium up here, and it's a little bit higher. But this is a weak, to me, seems a little bit weak, this chart, right? I'm looking at something like this, and next thing I see is something maybe like this. It's going to be off the screen, so I'm just going to move it over a little bit. Um, it's tied up here. So let me change these colors here so we're not looking like, all right. So you have this pointing to me down to the 140 range, which would make sense. The stock looks heavy. Stock looks a little bit heavy here. MACD is lower, and they're buying these. This could be, to me, this, and these are situations where, I put it in the box of not 100% sure. Reading it, it looks to me like someone large is selling this. Okay. They have been selling. So maybe on the earnings, they took that opportunity to start lowering the positions. Stock goes from 135 to 170. It's a large move, especially when you're holding a ton of stock. So maybe they start selling some here, gets down here, does selling more, and and they're switching from stock to basically these call spreads. So the down here at the 200, they're basically saying, you know what? And this is a weekly 200. This thing breaks here, it can go to right back to where we started. I'd rather take more profits from this move and just get long these call spreads. Change the risk reward a little bit because I have a lot of risk. This breaks, I'm just going to go right back to where I was. So take some profits. We have some profits built in here. Buy these call spreads. So they paid $3.70 for this $15 spread. Yeah, 3 to 1. So 200%. On this, yeah, it's not bad. They got long around here, so yeah, it makes sense to be switching the risk reward. If you were long stock, say you're long 50 million shares of stock, and stock goes up, you sell 10, 20%. So 15 million is, so let's say 3 million shares. Let's say a little bit more, 4 million shares, and then as it's going down, you're down to 4 million shares, and then all of a sudden you say, you know what? Let's replace that with another 4 million shares between 155 and 170. And then, we'll sell another couple of million shares down here just to kind of manage the position. Again, managing the position is different than I'm buying 150, 175 call spreads because I think it's going up because I love it. This is sort of where the distinction is between wanting to follow the trade or just trying to understand and read the market. This to me looks like, yeah, it's a nice level here, but stock looks weak. MACD is down here. I'd have to look at the daily as well, but it looks a little bit more like an adjustment, like a risk reward adjustment. All right. That's my time. I hope everyone has a great weekend, and we will send out an email I'll schedule next week. That's it. Be careful out there. Take care. Bye.